Chapter 6, An Introduction to Accounting Ratios. Learning to read between the lines. This chapter introduces accounting ratios. As you are already aware by now that the profit and loss is a flow statement of a reporting period, and the balance sheet is a position statement as at the end of a reporting period. Accounting ratios provide the means by which items on these statements can be interrelated to each other to arrive at meaningful conclusions about the financial health of the business entity. Classification of ratios. Accounting ratios can be classified based on the business objective that is aimed to be measured by the ratio. The source of data for arriving at the ratio. Based on business objective ratios can be classified as liquidity ratios, that measure the liquidity of the company. Solvency ratios, that measure the solvency of the company. Activity ratios, that measure the rate of one item vis-a-vis another closely related item, so as to provide a hint on whether the activity rate is healthy or otherwise. Profitability ratios, that measure the rate of profitability of the business entity. Based on source of data, ratios can be classified as income statement ratio. All the components of computing the ratio find their expression in the profit and loss statement. Position statement ratio. All the components of computing the ratio find their expression in the balance sheet. Composite ratio. The components of computing the ratio are drawn from both the profit and loss statement and the balance sheet. The diagram in the next page shows how all the financial ratios are grouped by business objective, followed by how the same ratios are grouped based on their data source. Definitions. Liquidity ratios. Ratio. Data source. Alias names. Formula. Remarks. Current ratio. Data source position statement. Also known as working capital ratio. Computed as current assets divided by current liabilities. Ideal ratio is 2:1. Liquidity ratio. Data source position statement. Also known as quick ratio/acid test ratio. Computed as quick assets divided by current liabilities. Ideal ratio is 1:1. Solvency ratios. Ratio. Data source. Alias names. Formula. Remarks. Debt-equity ratio. Data source position statement. Also known as leverage ratio. Computed as debt divided by equity. Ideal ratio is 2:1. Total assets to debt ratio. Data source position statement. Also known as financing ratio. Computed as total of assets less fictitious or notional assets divided by debt. Fixed assets should be considered net of depreciation. This measures how many times the assets cover the debt. Proprietary ratio. Data source position statement. Also known as ownership ratio. Computed as equity divided by total of assets less fictitious or notional assets. Fixed assets should be considered net of depreciation. This measures how much of assets are funded by proprietary funds. Activity ratios. Ratio. Data source. Alias names. Formula. Remarks. Stock turnover. Data source both income and position statement. Also known as inventory turnover. Computed as cost of goods sold divided by average of opening and closing stock of raw materials and finished goods. This measures how many times the cost of goods sold represents the average inventory carried by the organization. Debtor turnover. Data source both income and position statement. Also known as receivables turnover. Computed as net credit sales divided by average of opening and closing balance of debtors and bills receivables. Provisions for bad debts should not be deducted from the opening and closing balances of debtors and bills receivables. Page 36 of 64. Where opening and closing balance is not available, then closing balance alone can be used. Average receivables period can also be computed as days or months in a year / debtor turnover. Creditor turnover. Data source both income and position statement. Also known as payables turnover. Computed as net credit purchases divided by average of opening and closing balance of creditors and bills payable. Where opening and closing balance is not available, then closing balance alone can be used. Average payables period can also be computed as days or months in a year / creditor turnover. Working capital turnover. Data source both income and position statement. No other alias name. Computed as net sales divided by current assets less current liabilities. Or net sales divided by working capital. This ratio reveals the multiplier by which net sales covers the working capital of the company. Hence higher the better. Current assets turnover. Data source both income and position statement. No other alias name. Computed as net sales divided by current assets. This ratio reveals the multiplier by which net sales covers the current assets of the company. Hence higher the better. Fixed assets turnover. Data source both income and position statement. No other alias name. Computed as net sales divided by net fixed assets. This ratio reveals the multiplier by which net sales covers the fixed assets of the company. Hence higher the better. Profitability ratios. Ratio. Data source. Alias names. Formula. Remarks. Gross profit ratio. Data source income statement. Also known as gross profit margin. Computed as gross profit divided by net sales. Or net sales less cost of goods sold divided by net sales. None. Page 37 of 64. Operating ratio. Data source income statement. No other alias name. Computed as cost of goods sold plus operating expenses divided by net sales. Operating ratio equals 1, net profit ratio, and net profit ratio equals 1 minus net profit operating ratio. Ratio. Data source income statement. Also known as net profit margin. Computed as net profit divided by net sales. Return on investment. Data source both income and position statement. Also known as ROI. Computed as BIT divided by capital employed. Refer next section for definition of BIT and capital employed. Earnings per share. Data source both income and position statement. Also known as EPS. Computed as PATPD divided by number of equity shares that comprise the equity share capital. Refer next section for definition of PATPD. Dividend per share. Data source both income and position statement. Also known as DPS. Computed as equity dividend declared for an operating period divided by number of equity shares that comprise the equity share capital. Price-earnings ratio, PE ratio. Data source both income and position statement. Also known as price-earnings multiple or PE multiple. Computed as market price of equity share divided by earnings per share. This tells the multiple at which the stock market is valuing the company, and is a measure of whether the company is overvalued or undervalued by the market, when compared to the average P/E multiple for the industry to which the company belongs to. Glossary for terms used. Key term. Description. Equity. Proprietors' funds or shareholder funds. It includes any form of accumulated reserve. Ideally, notional assets like goodwill or accumulated loss should be deducted from capital plus accumulated reserves to arrive at the correct value of equity. It is computed as follows. Preference share capital plus equity share capital plus P&L reserves less notional/intangible assets. Reserves here do not include reserves or provisions created out of profit for providing against bad debts and depreciation. Only profit reserves not earmarked against any specific expenditure should be considered as reserves. Page 38 of 64. Debt. Long-term borrowings that have life duration of more than a year at the time of analysis. It is desirable to exclude that portion of long-term borrowings which is maturing within the next 1 year. Fixed assets. Physical assets that have life duration of more than a year from the date of acquisition, not as on the date of analysis. Net fixed assets. This is the current value of fixed assets netted off with the accumulated depreciation charged against them in every reporting period. It is computed as follows. Fixed assets less accumulated depreciation. Usually depreciation on a fixed asset is not credited to the assets account and is maintained as in credit balance in another account titled Accumulated Depreciation on Asset Name. This way the historical cost of the assets are always maintained at their original value and is collectively also known as gross block. Current assets. Assets that have life duration of 1 year or less. Current liabilities. Liabilities that have life duration of 1 year or less, but other than bank overdrafts, but inclusive of any long-term debt capital maturing in the next 1 year. Quick assets. This refers to the portion of current asset that can be converted almost immediately into cash or cash equivalents. It is computed as follows. Current assets less stock of raw material and or finished goods less prepaid expenses less short-term advances. Working capital. The excess of current assets over current liabilities. It is computed as follows. Current assets less current liabilities. Current liabilities should not include the short-term debt like bank overdraft or any other short-term loans taken to finance the working capital requirements of the business. Page 39 of 64. Capital employed. This refers to that part of the capital that is employed in productive assets. It is computed as follows. Net fixed assets plus working capital. It can also be reverse engineered as follows. Preference share capital plus equity share capital plus accumulated profits and reserves plus debt capital, including short-term bank debt to finance working capital gaps, less notional assets less non-operating assets like capitalized expenditure. Reserves here do not include reserves or provisions created out of profit for providing against bad debts and depreciation. Only profit reserves not earmarked against any specific expenditure should be considered as reserves. Cost of goods sold, or Cogs. This is the cost that is directly attributable to producing, in the case of manufacturing concern, or procuring, in the case of trading concern, the units that got sold in the operating period of analysis, and is computed as follows. For manufacturing concern, opening stock of raw material and finished goods, plus net purchases of raw material, plus direct labor expenses, plus direct factory operating expenses, less closing stock of raw material and finished goods. For a trading concern, opening stock of finished goods, plus net purchases of finished goods, plus direct trading expenses, less closing stock of finished goods. Net purchases of operating period is computed as follows. Gross purchases of operating period, less purchase returns of operating period. Page 40 of 64. Net credit purchases of operating period is computed as follows. Gross credit purchases of operating period, less returns of operating period that relates to credit purchases. Net sales of operating period is computed as follows. Gross sales of operating period, less sales returns of operating period. Net credit sales of operating period is computed as follows. Gross credit sales of operating period, less returns of operating period that relates to credit sales. A very strong planning is required to design a chart of account hierarchy that enables the capture of sales and purchase returns against credit sales and cash sales separately. EBITDA or PBITA. Earnings/profits before interest, depreciation and taxes is computed as net sales less cost of goods sold or Cogs less operating overheads. It cannot include the following on the income side. Interest on investments. Any other form of income generated from non-core business operations. It cannot include the following on the expense side that gets deducted from net sales. Interest to be paid on borrowings, short-term and long-term. Depreciation on fixed assets. Amortization of capital expenditure. Taxes to be paid to the government for the current operating period. Dividend declared for the current operating period, both equity and preferential. EBT or PBT. Earnings/profit before tax and is computed as EBITDA plus interest income from investments. Page 41 of 64. Plus non-operating income/gains, less non-operating expenses/losses, less interest on debt capital, long-term and short-term, less depreciation on fixed assets, less amortization of capital expenditure. While that portion of fixed assets that is written off each year is known as depreciation, the portion of a capitalized expenditure that is written off each year is known as amortization. EAT or PAT. Earnings/profit before tax is computed as EBT less taxes payable for reporting period. Taxes can be a complex calculation and may involve set-off of losses from past years etc. based on applicable laws local to the domicile of a business entity, and is typically provided as a working schedule in the finalization of accounts. Taxation is beyond the scope of this book. EATPD or PATPD. Earnings/profit after tax and preferential dividend is computed as EAT less dividend declared on preference shares. Preference dividend can sometimes be declared even when dividend for equity share capital is not declared. Page 42 of 64.